Hello, everyone. I'm Dr. Ravi, the founder and CEO of FabInvest. Thank you for joining us today and for your interest in our investment opportunities. Welcome to this webinar. It's been quite some time now that we have listed a project in Bangalore, and over the last few months, we have received over 50 plus investment proposals from various builders. But like you guys are aware, our investment philosophy is to invest in low risk investments and late stage projects. Every project that came our way in the last few months was either very early stage or carried a significant risk that was against our investment policy. So we have decided to wait until we find the right project. And today, here we are with our most exact investment project yet. And this is an investment that ticks all the boxes of a perfect investment opportunity. So let's get into more details. So this is an investment partnership opportunity with a Cat A rated builder where FabInvest is investing a fund of 30 crore rupees, and this money and this investment is in a RERA approved late stage grade A 3 BHK gated community apartment project in Bangalore. So for our 30 crore investment, the builder is offering us 55,000 square feet of built up area in the project as investor share. Okay, 55,000 square feet as investor share, and this is spread across 26 flats in the project across various towers. So the key point to note here is this 55,000 SFT is being acquired at almost 40% discount on today's market value. Okay, it's a 40% discounted acquisition for our bulk investment that we are doing in the project. So coming to a fractional investment, the minimum ticket size for a fractional investor starts at 30 lakh rupees. So this particular opportunity will have 100 slots in total, that is 30 lakh per slot. So this investment is for a tenure of 2 to 3 years, and we will hold our units for 2 to 3 years. And post construction, we will sell our flats, and this will yield us approx 50 to 70% profit in a span of 2 to 3 years. Most importantly, this profit is not based on future appreciation, but this is more or less secured by the upfront discount that we are being given during our initial investment itself. The 40% discount acquisition that we are doing today will generate us approx 50 to 70% profit in a span of 2 to 3 years. Appreciation is additional. Any appreciation over today's market price will only increase our profits. We'll talk more about the exact numbers in the later part of the webinar. So now coming to project details, the name of the project that we are investing in is Engrace Vista. It is a late stage mid-rise gated community project that is built in 8 acres, and it comes with 7 towers, 8 acres and 7 towers. So this is a RERA approved project, and it comes with 392 3 BHK apartments. Okay, 392 3 BHK apartments, and it's an exclusive 3 BHK community. There are no 1 BHKs or 2 BHKs, and all flats are of the same size, approx 2,100 square feet each. So these are very spacious and big size flats. So the market price to a regular buyer starts from 1.6 crore onwards to a regular buyer. So here is a quick glimpse of the project. As you can see, it is a late stage project, and 3 towers out of the 7 towers are 100% complete. The entire structural work of 3 towers is fully done. So this is another view. And this project only started 1.5 years ago. The RERA of this project was sanctioned in March 2024. So in just 1.5 years, the builder has completed 100% structural work for 3 towers, and the other towers are currently at around 40 to 50% stage. And the entire structural work of the project will be done in the next 6 to 9 months. So the builder is planning delivery by 2027 December. So speaking about builder profile, the name of the builder that we are investing in is Modern Spaces. So Modern Spaces is highly famous and reputed in Sarjapur micro market. And in fact, this builder has constructed the largest cluster in Sarjapur Road. So here is a quick glimpse of the cluster that the builder has constructed. So every building you see in this photo is constructed by the builder. And this is almost 100 to 150 plus acres that you see in the screen. And this cluster is worth over 2,500 plus crore, the overall cost of construction and the project value. Also, Modern Spaces till date has delivered 1,500 plus flats and also has constructed over 275 luxury villas, where each villa costs over 3.5 to 4 crores plus. Also, the builder is CAT A rated by HDFC Bank and Navi Finance. So what this means is CAT A rating is a rating given by banks based on the builder's financial health and their track record. They take multiple factors like their credit rating, their loan repayment history, their sales velocity, their growth, their brand reputation. And a city like Bangalore has over 500 plus builders, including all the small, mid-size, and big ones, out of which hardly 15 to 20 builders have this CAT A rating. And Modern Spaces is the youngest builder to enter this list, and their massive growth is the main reason for them becoming part of this CAT A club in less than 10 years from their inception. And also another point is the builder owns 250 acres of land bank in Sarjapur area, just beside this cluster. 250 acres of land bank, and this is worth over 2,000 plus crore. Now, why is this important? Is because a builder with such humongous land bank will never go bankrupt. Okay, so talking about a worst case scenario, any issue to any of their projects, all the builder has to do is, in a worst case scenario, I mean, the project obviously has good sales, enough funding from Bajaj Finance. Bajaj has funded over 150 crore. But in a worst case scenario, a builder with enough land bank, all he has to do in a bad day is just sell a few acres to raise enough months to finish any project. So selling 4 to 5 acres from their land bank would raise enough money that is required to finish off this particular project on a worst case scenario. So we'll talk more about this land bank in the next part of the webinar. So speaking about location, the project is located in Sompura Gate, Sarjapur Road, opposite Sarjapur Register Office. So the project is 30 minutes from all the three major IT hubs in Bangalore. So Whitefield, Electronic City, and Belandur are just 30 minutes drive from this project. And this is the main reason for Sarjapur Road's growth in the last 5 years, because of the close proximity to all the three IT hubs. In fact, there is no other location in Bangalore that connects all the three IT hubs. Also, Prestige City is just 3 kilometers from this project. Prestige City is a 200-acre mega gated community by Prestige. And also Forum Mall is just 3 kilometers away. And Viprocess is just 5 kilometers away. And there are numerous international schools in less than 10 minutes of drive from this particular project. So I would like to now explain about what Fab Invest is to some new investors who are watching our webinar for the first time. Fab Invest is an alternate investment platform, and we facilitate our investors to micro invest in prime under construction real estate projects as an investment partner. So this is an investment partnership opportunity with the builder where we invest a large fund in an under construction project and acquire share in the project. Okay, the key point to notice, this share is typically acquired at a significant discount on today's market price. It is approximately 40% discount on today's market value. So we then hold these flats for 2 to 3 years, and post construction, we sell them for a profit. So this would yield us at least 50 to 60% profit in a quick span of 2 to 3 years. So our company currently manages over 110 crore worth of assets, and we have distributed over 8 crore in returns and profits to our investors in the last 1.5 years. And we invest in grade A gated community projects. So here is a quick glimpse of our portfolio. The first project that you see is our previous investment opportunity. It is in Hyderabad, and this project we have invested with one of the biggest builders in entire Hyderabad. In fact, the builder has delivered over 5,000 plus flats till date, and for comparison, they are similar to Purvankara in Bangalore. So we have invested in their Gachibowli project. The next is a villa project in Hyderabad again. So this is Sunesh. Previously, we have worked with Modern Spaces, the same builder a year ago. We have invested 12 crore rupees in their villa project, and we have already exited from that project with 18% IRR. Our first experience with the builder was very pleasant and smooth. He was super professional, and that is the reason why we have almost tripled down our investment value. You'll also be able to see the news related to our exit on various channels as well. So here are the other projects that we invested in. Now, I'll explain more about how investment partnership with builders work. Just like how every business has investors, builders also have investors or investment partners. So any real estate project, no matter what the project size is, be it 10 crore, 100 crore, or a mega community worth 1000 plus crore, be it no matter in which city is in, be it Hyderabad, Mumbai, Delhi, Bangalore, every project has investment partners. That is high net worth individuals who invest large amounts of capital into the project and help the builder to fund the project. So in return for these investments, the builder offers the investment partner a share in the project that is given at a significant discount on market price. The investment partner just holds these flats for 2 to 3 years until construction is complete. And post construction completion, they sell for a profit and they typically make around 50 to 70% profit in a quick span of 2 to 3 years. So investment partnership with builders is highly profitable provided you invest in the right project and right builder. But the main problem is the ticket size usually starts from 10 plus crore or more, and this is typically accessible only to high net worth individuals. So now, what Fab Invest is doing is instead of one big high net worth investor, we pool a group of investors and we form a big investment. Okay. So next, we incorporate a company on the name of all these investors. So this is a holding company or a special purpose vehicle that is incorporated for a specific project on the name of all your investors. For every project that we invest in, we form a new company, a new holding company. So now the company is incorporated, the company will invest in the project on your behalf and the property is registered on the company's name. So your share in the company is equal to your share in the property. Your investment will be protected by fractional ownership in the property that is acquired by the company. So fractional ownership is a concept where a group of people join an investment of property. The concept is already very famous, and there are very large companies that are Bangalore based that have sold over 2000 crore worth of properties, but everyone is in commercial space via fractional ownership. So the model has been there from last 5 years, and all the online players combined have sold over 10,000 crore worth of properties via fractional ownership. So for years, this has to be proven very stable. So if you are not aware of fractional ownership, please Google post this session and you'll see multiple platforms in this business. But everyone is in rental income business or in commercial property business where you can generate 7.5% rentals per annum. So we are using the same fractional ownership in a different dimension. So our investment thesis and approach is different compared to other fractional ownership players in commercial real estate space. So our purpose of the investment is to grow money aggressively at around 40 to 50% or even more in a quick span. So invest, grow your money at 40 to 50% in 2 years. Reinvest is our concept. So with Fab Invest, you'll be able to double your money in less than 5 years if you are reinvesting your returns. And like mentioned, this doubling is not based on appreciation. It is more or less secured by the upfront discount that we are acquiring when the property is being, we are investing in the project. So now let's get to the investment overview. So 30 crore is the investment that we are doing in this project, and 55,000 square feet is being acquired as investor share, which is in the form of 26 flats. So the market price of the flats currently is 8,250 rupees per square feet. So this is the current selling price at which the builder is selling to his clients, to a regular home buyer. So for our bulk investment, we are being offered a 40% discount on today's value. So our all-inclusive acquisition price that we pay to the builder or that we pay for these flats is 5,250 rupees per square feet. That is a straight away 3,000 rupees discount on today's market value. Okay, a 3,000 rupees discount on today's value for the 30 crore investment that we are doing. So this would give us a profit margin of at least 60% in the next 2 to 3 years. So we don't have to wait for appreciation. Let's say post project completion, we still sell at today's rate. So, I mean, that doesn't happen usually because post project completion, the prices would increase. But let's say we only sell it at today's rates. So that would still give us 60% profit in a span of 2 to 3 years. And this is not based on appreciation. Any appreciation that happens would only increase our profit. So now let's get to the valuation. So the builder has said that he is selling these flats at 8,250 rupees per SFT, right? But how do we know that the discount is genuine and sales are actually happening at that rate? because our profit is based on the discounted acquisition, right? So every property we invest in, we get the property verified and valued by valuers who work for banks. Okay, valuers who work for banks. And this project, we have got it valued by a company named CBRE. So for those of you who do not know, CBRE is the world's biggest real estate valuer. Okay, not just India's biggest. They are the world's biggest real estate valuer, and they are a Fortune 100 company, a public listed Fortune 100 company with offices in 100 plus countries and with presence in all 7 Indian metros. CBRE has given the flats a valuation of 8,000 rupees per square feet. Okay, so this is what CBRE believe the flats are worth. And going by CBRE's valuation, it is approximately a 37% discount that we are getting on today's rate. Also, to give you more context about how tight CBRE reports are, any report that CBRE issues out to public follows a three-tier verification system. Okay, so the local valuer goes to the property, does his due diligence, and issues a report. So this report is then verified by CBRE's Bangalore head. The city head verifies the report, and how does he verify it? Like mentioned, CBRE has been there in this business for multiple decades, and they typically value around 1,000 properties every single month for various banks. So they have data of prices, property prices in all the metros in India, not just as on today, but they have the data from the last 25 years. If you want to know the property price in a particular area in year 2000, they'll be able to tell you what price it was there in 2000, 2005, 2010. So they have the entire price trends, charts, and history. So the city head compares this valuation report with their real-time database, and if the deviation is more than 5%, that is when a report would get flagged, and that is when a scrutiny happens. Okay, so any deviation more than 5%, the project or the report goes for a scrutiny. And once the city head finishes his verification, the state head repeats the same process. All right. So any report that comes out from CBRE is verified by their city head and by their state head. And if the report is worth 100 crore or more, the country head also verifies the report. So that is how tight CBRE reports are, and that is why they are the world's leading real estate valuer. So now let's talk about the legal status of the project. The project has APF approvals from all major nationalized banks. So what this means is all these banks have done their due diligence in terms of the legal title of the land, the approvals of the project, the sanctions of the project, and they are found that all the approvals and title is clean, and they are extending home loan facility to the buyers of the project. So if there is a buyer who wants to buy a particular flat in the project, the bank will sanction a home loan in just 48 hours without any project related verification. All right, because it's already done. So here is a quick glimpse of the APF from various banks. So this is SBI's APF for this project. This is Tata Capital. This is HDFC Bank and Navi Finance. There are three other banks like Canara Bank, IDFC, and another NBFC that is involved. So the project total has 7 APF approvals. So now, how do we acquire our share in the project for the 30 crore investment? So we acquire our share, that is the 26 flats, via a registered sale agreement. So what this does is this logs the flats on our particular name, and the builder will not be able to sell these flats to anyone else. So once the registration is done, we hold these flats for a period of 2 to 3 years, and we exit when the market is right. So since this is a long-term investment, we'll be able to avail LTCG benefits as well, long-term capital gains benefits, and this is a tax-efficient investment. For those of you who are already in a 20% tax bracket, 30% tax bracket, so whatever profit you make from this investment will not be treated as your salary income, but straight away comes under the LTCG benefits, and you'll be charged a flat 12.5% long-term capital gains tax, and that is all you have to pay. So there's a tax-efficient investment. So our targeted exit price is 8,250 rupees to 9,000 rupees per SFT in a span of 2 to 3 years. This is the targeted exit that we are looking at, and this would fetch us approximately 50 to 70% profit in 2 to 3 years. So now let me explain the numbers in terms of a fractional investor. The minimum investment, like I mentioned, is 30 lakh rupees, and the entry price is 5,250 rupees per square feet. So let's talk about a low case scenario where we sell the flats after 2 years for a price that is lesser than today. Okay, the chance of this happening is less than 0.1%. But since we have to talk about both aspects, low end and high end, so let's assume we are selling a finished product after 2 years for approx 4 to 500 rupees lower than today's value. So assuming a worst case scenario, so this price would yield us at least 50% profit. Okay, even in a worst case scenario, and that would mean 15 lakh profit for a 30 lakh investor in a worst case scenario. Okay, so let's say we sell this at 7,800 rupees per SFT. 15 lakh profit is what a 30 lakh investor would make. Now let's talk about an ideal case scenario. I'm not talking about the best case. I'm talking about an ideal case where property prices appreciate by just 3 to 4% per year in a span of 3 years. So let's say we sell the flats at over 9,200 rupees per SFT in 3 years, assuming it is around 8,200 right now, right? So 3% or 3 to 4% appreciation for 3 years would take the property to 9,200. So let's say we sell it at this rate. So this would give us a 75% profit on our investment value. Okay, 75% on our investment value. And for a 30 lakh investor, this would mean 22.5 lakh profit in a span of 3 years. The low case is 50% and the higher end or the ideal end, not the higher end, is approx 75%. So your projected profit on this investment will range between these two numbers, between 15 to 22.5 lakh. That is where the investment profit would range. So now we have calculated the lower end and higher end, right? But let's talk numbers. Let's talk predictions. What price can this property realistically fetch us? So here is the property price chart in Sarjapur Road in the last 3 years, and this is taken from 99 Acres, the leading real estate portal in India. And as you can see, land prices have increased by over 100% in the last 3 years. Okay, and flat prices by over 80% in the last 3 years. And like mentioned, the key reasons for Sarjapur's growth as a residential hub are close connectivity to all the three major IT hubs, and also the air is clean. There is no water shortage because within city, I mean, if you are aware, if you have to get groundwater, you will have to dig a bore of more than 1,000+ feet. Okay, because Bangalore is already crowded and there is no groundwater. But in this particular area, you'll find water if you dig just 100 to 150 feet. So the air is clean, water is clean, and close connectivity are the main reason. And most importantly, these are affordable compared to city prime regions. The location is growing, right? The prices are still very much affordable to a middle class investor. So that is the reason for Sarjapur's growth. And this is the reason all national builders have queued up with projects in Sarjapur Road in this particular area. The Lodha has started their project recently. Brigade is already there. Prestige has constructed Prestige City in a 200-acre land bank, and they're coming up with more in this particular area. So all national builders are coming up with projects in this particular area that signals strong growth of Sarjapur in the next 4 to 5 years. Also, Godrej recently has acquired 50 acres of land just beside Engrace Vista. Okay, 50 acres just beside. So this article that you see is from October, where the first tranche of 25 acres was registered, and the next tranche of 25 acres was registered only last week. And the key point to note here is this 50 acres was sold by Modern Spaces, right? The builder in which we are investing. So Modern Spaces has sold 50+ acres just beside Engrace Vista. It is on the same road. It is after Engrace Vista, and Godrej is launching their project in the next 12 to 15 months. Okay. So, and Godrej's launch price would be 10,000 per SFT. It will not be less than 10,000. It will be only more than 10,000. So 10,000 will be the base price, then floor rise, amenities, car parking. So the landing would be over 11,000, 11,500 per SFT. So from the builder's words, builder anticipates the prices in Grace Vista, our current property prices, to hit 10,000 per SFT in the next 2 years, because within 2 years, this project will be fully complete and ready for occupancy. Whereas on the other hand, Godrej would be selling an under construction or maybe even an excavation stage project at 10,000 per SFT. So what would any buyer prefer? So the builder is super confident that the property prices will hit 10,000 in the next 2 years. But like, we are a conservative company, and assuming, we are confident that they will hit over 9,000 or 9,300 at least considering all the aspects that are there. And another point is even the Lodha project that is there is a joint venture between Lodha and Modern Spaces, where Modern Spaces has given 25 acres of land to Lodha for development. So like mentioned, Modern Spaces in total has 500 acres of land bank in this particular area, 500 acres, out of which 150 is already consumed for the cluster that they are building. So 50 acres is sold to Godrej, 24 acres to Lodha, and another 24 acres deal is happening at the moment with one of the top 5 builders in Bangalore. So they are left with 250 more acres in this particular area after all these deals are done. So it's a very positive company, very cash rich or asset rich company, and we are investing with a good builder, a reputed builder, and in a super late stage project. So 10,000 per SFT is what the builder predicts the price will get to, but 9,000 to 9,500 is where we are expecting should be able to sell in the next 2 to 3 years. So now let's talk about the exit process. So all these numbers, the profit projections sound very lucrative, but how are we going to turn this into a reality so that whatever we project is actually realized by you guys and you investors? So let's talk about sales strategy. If you are already aware, we would want to implement our investment strategy for our sales as well. Like, every 45 days or 2 months, we list a new project where we commit around 25 to 30 crore to a builder. And when we launch an investment campaign, we aggressively market it for 30 to 40 days and we raise the entire 30 crore in around 45 days. Okay, so we follow a subscription model where every investment has a fixed number of slots. For example, this investment has 100 slots, right? So in the 45-day period, all an investor has to do is pay a 1 lakh token and block a slot. So once all the 100 slots are fully subscribed, that is when we go ahead with the property registration, and the registration happens on one single day. Okay. So we want to implement the same investment strategy that has worked out for us in the last 1.5 years for our sales strategy as well. So once we decide to sell the property, I mean, you guys decide to sell the property, we will start an aggressive marketing campaign that would run for 2 to 3 months. Okay. So an aggressive marketing campaign for 2 to 3 months where we spend a significant amount of money on marketing. So let me break this down with numbers so that you guys have better clarity as to how this would work. So 25 flats is what we own in this project, right? 25 to 26. So my calculation for this exit is if I have to sell 26 flats, I need to generate at least 250 site visits. Okay, assuming 1 out of 10 actually converts. So 250 site visits is what I have to generate to sell 25 flats. So if I have to generate 250 site visits, I will have to pitch the product or pitch the flats to at least 2,500 home buyers at that point of time. Assuming 1 out of 10 walks in and 1 out of 10 actually converts. So 1 out of 100 is the usual conversion metric in real estate sales. I mean, the metric is in fact even better. It's over 2 to 3%, but assuming a worst case scenario, 1% is the conversion ratio in real estate sales. Okay. So 2,500 buyers is to whom I should pitch this particular project, and that would cost us approx 25 to 30 lakh in marketing budget. And we would spend this entire money in a span of 2 to 3 months. And the target is to sell all the flats at one single time. So in the span of 2 to 3 months, what happens is interested buyers will again pay a EOI and token advance and block a particular flat. And all the flats will be sold at once in a span of 7 days. Okay, in a span of 7 to 10 days. The 2 to 3 month period is the EOI period where people pay advance, block a flat, book a flat, and the registration of all the flats happen in a period of 7 to 10 days. So the exit is going to happen at once, and all the money that we are investing will come out at once so that you guys will be able to see the profits at once. And if interested, you will be able to invest the same money in our next project. So this is our sales strategy. Aggressive marketing for 2 to 3 months, EOI from the interested buyers in the 2 to 3 month period, and sell all the flats at once. So exit will be given to everyone at the same time. So now the next question, who determines the exit price and exit timing? So it is you guys who decide the exit price and exit timing because you are the owners of these flats, right? We are just a manager of this SPV and the property. So 2 to 3 years is the holding period for this particular investment, like you're aware. So 22nd month, okay, 2 months before the 2 year period, what we will do is we will send you guys a survey report, right? A survey report that covers the current price at which the builder is selling, the new project launches that are happening in this particular area, all right, and our projected sale price. And also we'll be conducting a CBRE valuation again at that point of time, so that you guys get to know what the actual value of this particular property is at that point of time. So once the survey report is sent, we will send you guys a voting process. So this survey would have the forecast of pricing in the next 3 to 9 months, all right, so that you guys get to decide what is the best timing and best price for which the property can be sold. So once the survey is sent, we will conduct a voting, and 75% of the majority should agree to the sale price and sale timing. All right, it's an absolute majority. And once 75% of the investors agree for the sale price, that is when we would start our aggressive marketing campaign. That is when we would invest the 25-30 lakh budget at once. And that is when we start the sales. But one important point here, what if you are in the minority? So let's say after 2 years, the property is fetching maybe 8,500 and Godrej has just launched. CBRE or our valuators predict that we'll be able to sell it at 10,000 per SFT if we just hold on for another 6 to 9 months. And 90% of investors want to hold. So what if you are in the minority of 10%? So the beauty of this investment is minorities are also not left behind. Even minority has a say because our asset is in the form of multiple units. So let's say 90% want to hold, but only 10% want to sell for their own personal reasons, and they're happy with whatever profit they are making at that point of time. So let's say 10% want to sell. What we'll do is we will sell the 2 to 3 flats that are required to give exit to the minority. Okay, so you don't have to wait along with all the 75% of the people. So exit is going to be a smooth process. Both majority and minority have a say. If majority want to wait, they can wait to gain more appreciation. If minority want to exit, all you have to do is you just need to have 4 buyers, okay, who are ready to sell a flat and exit at a particular price. So each flat is approximately 1.2 crore on the date of investment. So if 4 investors subscribe for exit, flat will be sold and you'll be given an exit. All right. So both minority and majority have a say. So your choices and your preferences can be, will be valued and will be acted accordingly. So now let me give you a brief or a quick investment overview. So the minimum investment for a fractional investor is 30 lakh rupees, and 30 crore is what we are investing in this project. They are acquiring approximately 55,000 square feet of built up area in the project as investor share. And for the bulk investment that we are doing, the builder is offering us a 40% discount on today's value. So 2 to 3 years would be our holding tenure, because that is the good time for the investment to mature and for us to realize our maximum profitability. So this investment will yield an average of at least 60%. The range can vary between 50 to 75%. But if you go by the builder's word, 10K is what he predicts. So this is a really good investment with ample scope of appreciation considering the various factors that I just mentioned. So this is an investment partnership opportunity with one of the highly reputed and biggest builders in Sarjapur Road. And this is a low risk investment opportunity in a late stage. See, we generally get questions from our investors asking, what is the risk in this? What is the risk in this? Most of you watching this webinar might be watching this from your homes that you have bought at some point of time in life. Excuse me. So this is just like buying a flat at 40% discount. So even for your homes, there might have been investment partners who would have invested in that project and would have entered at almost 30 to 40% discount. This is just like buying a property at a discounted price. And like mentioned, investment partnership is something that has been there for multiple decades and is there in every city, be it tier 1, tier 2, Hyderabad, Bangalore, or even Mysore, for example. So the standards and the numbers or the format is the same. It is just the type of project and the quantum of investment that varies from city to city. So we believe this is a very low risk investment opportunity considering that this is an advanced stage project. I think if you guys are aware of real estate, you already would have understood how good this investment opportunity is, because such variable deals are very tough to find in late stage investments. Okay, typically variable deals are available in pre-launch projects. Okay, so what pre-launch means is before all approvals, before RERA. Okay, let's say a builder wants to start a project somewhere. All right. So from planning to approvals, it typically takes around 18 months. So such forms of variable deals are available in pre-launch options, and that is the reason why we didn't launch a project in Bangalore over the last 5 to 6 months, because every deal was a super early stage and it didn't fit our investment philosophy. So the reason why we have a variable opportunity or such a lucrative opportunity where there is a flat 3,000 rupees discount on today's price is because of our previous relation with modern spaces, and also Fab Invest has committed over 150 crore to this particular builders in the next 12 months. Okay, modern spaces has 6 projects, so we have committed approx 30 crore to all of their 5 to 6 projects in the next 12 months. And this is our first step of investment. The other projects are in approval stage at the moment. So as and when they get approvals is when we would be investing. So this deal is very sweet because it is the first of our next deals that would happen with this particular builder. And every investment, like mentioned, will be in a different stage, different ROI, risk reward ratio would be different. But this particular opportunity is what we believe is one of the best that we have done. Considering it is a very low stage, 3 towers are 100% complete. The other towers are almost at 30 to 40% stage, and the entire structural work will be done in the next 6 to 9 months. So now let me explain the booking process. We currently have a pre-book offer that is going on. So what pre-book means is our deal with the builder is any registrations that are happening by this month end, November 30th. All right. The all-inclusive entry price is 5,250 rupees per SFT. So any registrations that are happening before this month end, this is the price at which we'll acquire the units. It's not 100% investment at once. At this moment, we are currently at around 55 to 60% funded, and post this webinar, I think it should be at almost 75%. And whatever value we hit at by this month end, the registration will happen this month end, and your tenure would start immediately. So the price for registrations happening this month end is 5250, and post month end, the price would increase to 5,500 rupees per SSC. So the prices will increase by 5%, and your entry price will increase by 5%. And also, if you factor the profit loss, so your net rate would be affected, or your net profit would be affected by around 7 to 8% if you are investing post pre-launch. Okay, because that is a deal that we have with the builder. Because the discount that is offering is humongous, right? So it's a time-based and time-sensitive investment. So if any of you are interested and want to go ahead with the booking process, the first step is you have to pay, you have to sign an EOI document. So this EOI is a simple 2-page document that covers the gist of the transaction. Whatever I just told you on the webinar will be on it. The builder's name, the entry price, the project details, everything. And once you sign this EOI, you have to pay a 1 lakh token to block a slot. So once this 1 lakh token is paid, you have to pay the balance in the next, we'll send you a drawdown notice. We'll set a registration date with the builder. So once the registration date is set, we'll be issuing a drawdown notice in the next 4 to 5 days at the most, because we're almost, we are at 23rd today, right? So 100% has to be paid upon drawdown notice. So entry price will increase to 5,500 rupees per SFT post pre-book. So pre-book will be available for 2 more days. Tuesday evening, 7 p.m. is when pre-book price ends, and from Wednesday, it will be the regular pricing of 5,500 rupees per SFT. If you guys have been following us, I think we follow a similar approach for all our investments. So there is a pre-book phase that runs for almost 2 to 3 weeks, and post pre-book, it is a regular price, and the net return would be affected by almost 5 to 6%. So if you are interested, pre-book your slot by Tuesday 7 p.m. Also, we have private investment options in this particular opportunity. So what private investment means is, if you are capable of investing for one full flat, that is around 1.2 crore, depending on the flat size, anywhere plus or minus 2 to 3 lakh. So a flat will be directly registered on your personal name. You don't have to invest with Fab Invest, via Fab Invest. You don't have to be part of the group or part of the SPV, but the flat will be directly registered on your name, and you will have 100% control on your flat. Okay, you can decide the sale price, the sale timing. There is no voting process. You get to choose when to sell your flat and at whatever price you are comfortable with. So private investments are available for people who can invest for a full flat. And again, in private investments, there are 2 options. You can either go on your personal name, or you can go with Fabulous, where the flat is on Fabulous name, and Fabulous would manage the property. But what happens in a private deal via Fabulous is the partnership deed, the main document that governs this transaction. It will be clearly mentioned that, let's say, flat number 601 belongs to Mr. X. So 100% rights on flat number 601 belong to Mr. X. And likewise, Mr. X does not have any right on all the other flats held by the SPV. Similarly, all the other investors in the company do not own any right on flat number 601, and their rights are confined to other group investment units. So that is how we segregate a private investments. You have two options. If you want a flat on your name, you can get it done on your name. Either if you do not have the time to come for registrations, and if you want a professional company to manage your investment, you can invest for a full flat, but the flat will be reserved on your particular name. The documentation also will be done such. So that is about private investments. If any of you are interested in a private investment, 5 lakh is the token amount that you have to pay to block a particular unit, and the balance amount has to be paid before registration, maybe a day prior registration. And the most important point you have to note here is the registration for your flat also happens along with us. Okay. So let's say someone is ready today, you have to wait for another 1 week to 10 more days so that you can join us along with the registration. This deal is available only because of the bulk investment that we are doing. So you will have to accompany us along with the registration, and your registration would more or less happen along with our registration, or maybe 1 or 2 days here and there, before or after. So that is about private investment. So the prices for private investment also will increase to 5,500 per SFT post pre-book, because from the builder point of view, it is a bulk investment that he looks at, right? It is not whether you are putting 30 lakh or 1 crore. So any registrations before 5,000, before 30th, 5,500 is 5,250 is your all-inclusive investment price. Post pre-book, it is 5,500. Also, I would like to add another point here. In case any of you believe that, require more time to pool your funds, but would want to join this pre-book phase and want to grab this pre-book price. So what we can do, or how we can help you out here is, so just pay the UI for now. And if anyone is paying 30% of the total investment value before November 30th, you will be able to lock the pre-launch price, and you can take another couple of weeks to arrange your balance funds. Okay. If you want to lock the price of this pre-book, pay 1 lakh today, and the balance 30% before November 30th. So once you pay the 30%, our company, from our corpus, we would invest the 70% on your behalf, and we will get the registration done. And you can take 2 more weeks after December 1st for you to arrange your balance fund. Okay, but your investment tenure will only start after the full fund is received. So that's about this particular investment opportunity. So if any of you want to contact us, you can call our company number from here. You'll also have that number on our website. You can also WhatsApp us on this number, or you can email us on support@fabinvest.in. Also, if any one of you would want to personally meet our team, we have offices in 2 locations, one in Hyderabad and one in Bangalore. Our Hyderabad office is in High Tech City, Madhapur, and our Bangalore office is on Bannerkata Road, beside IIM Bangalore. So, but please do come with prior appointments. So we are working today. We are open to take your calls, and we are open to meet you guys today as well. Also, if any one of you would want to personally talk to me, I'm working full day today. Just please out to your investment consultant, and they would schedule a call with me directly. So that's about the investment. So now let's get to the Q&A session.